Hello everyone. Today we are going to calculate weighted average cost of capital and return on invested capital by the example of Momo Inc. Let's jump right in. So now on your screen you see Excel, which I put together, where I calculated weighted average cost of capital for Momo Inc. and some other companies. I will take 2020 as an example. So in order to calculate weighted average cost of capital, you will need certain numbers. So you will need the market cap. The market cap is taken at the end of 2020 in order to reflect as a reflection of year 2020. You can also take maybe average. In my case, I just took the number which was the last number in year 2020. Debt. This is also the latest number from the end of the year 2020. This is the long-term debt. You can find it, of course, in the annual report. If it's a US company, it's K10. If it's a foreign company trading on US market, stock exchange, it would be F20. And you also sometimes can find number on the macro trends, which is good overview for the main figures of stock traded company. I recommend. So we take those two numbers. We then need to decide, or rather calculate, what is the percentage of market cap in our calculation and what is the percentage of debt, because we want to take those figures as a basis and then calculate the cost of this capital. So you take the cost of equity, which is the same market cap, and you calculate the cost of the debt. How much do we pay on the debt? So the first we take, we have 80% of equity of market cap and around 20% of debt, long-term debt. In order to calculate the cost of equity, we need to know if there were dividends paid. Dividends is a cost of equity because those money paid to the shareholders and therefore they reduce into the value of the equity. That's why when you buy a stock paying dividends, you cannot just buy it when they pay dividends and sell it later on, because the return on invested capital changes accordingly. And in the perfect scenario, which we know that markets are not, you would have exactly the same number after dividends are paid. You would have the price of your share reduced by exactly the same value you obtained through dividends. So the stock price of Momo Inc. was at the end of 2020 $13.38. The dividends paid in 2020 were 76 cents. And I just calculated real quick, percentage wise, the dividends represent 5.7% in 2020. So 5.7% is the cost of the capital related to those 80% of the equity. The simple multiplication, we multiply 80% by 5.7 and we get 4.5. 4.5 is a portion of the cost related to equity. Now we go to the next part. The next part is the 20% related to long-term debt. We know from the annual report that long-term debt percentage need to be paid on this debt is 1.25%. You can find it in the annual report. And if you multiply this 1.25% by 20% of long-term debt, you get the number. You get 0.2% cost on long-term debt. You also need to reduce it by 25% related to the corporate tax, because it's deducted from the taxable base. So if you multiply that 0.2%, I will make a little bit more visible. You multiply 0.25% of the cost on the long-term debt, multiplied by 75, because we want to, it's a reduced base, so we want to reduce 25% of the corporate tax. Therefore, it's a 1 minus 0.25. So we multiply it by 75% and we get 0.19%. And then we just sum them together. We sum the cost of capital on equity with the cost of capital on the debt, which in total is 4.7% in 2020, significantly higher comparison to 2019 and 2018. Mainly in 2018 we did not have any dividends, and 2019 we had smaller dividends and a larger market cap. That's pretty much it on weighted average cost of capital. Let's now go to the return on invested capital. Again, return on invested capital, I took Momo Inc. as a basis, multiple years compared with some other companies in the industry, in the market. 2020 we will take as an example. We again will need certain figures which we can find in the annual report or in a database you like, but you need to check that it actually corresponds to what written in the official figures from the company. We have net income, it's a total net income in 2020 for Momo Inc. We have dividends paid, it's a total amount, nominal amount of dividends paid by Momo Inc. to shareholders. And then we deduct from the net income dividends in order to have amount available after paying the dividends. We have again debt. We have again equity, as in a previous calculation for weighted average cost of capital. And we sum debt and equity together. And then we have very simple calculation. We divide the sum, the net income after paying dividends, by the equity plus debt. And we get return on invested capital of 4%. What I do a few steps further, and I want to see what is my return on invested capital after minus weighted average cost of capital. So I just deduct from 4% minus 4.7%, which I had here. It's not 4 that you would see. 4.5% minus 4.7%, and we have remaining minus 0.2%. as a net number for return on invested capital minus weighted average cost of capital. We of course need to consider that we have dividends, and the dividends paid in 2020 were 5.7%. If you consider dividends combined with the net return on invested capital, you basically sum them together and you get that you had a return of 5.4% for year 2020. It means you got dividends, but return on invested capital minus weighted average cost of capital was negative. Therefore, the net return is around 5.4%. Those figures are widely used by professional investors in order to define what price should be paid in a certain year or in a certain point of time for a certain equity. Thank you everyone. I hope you like this video and see you in the next one. Bye bye.